Most people still talk about MSTR like it's just Bitcoin with a stock ticker. And honestly, that used to be the simple way to look at it. But today, MicroStrategy is not just a Bitcoin proxy anymore. It's a full capital structure machine, common stock, convertible debt, multiple preferred shares, ATM issuance, a cash reserve, and a treasury strategy all wrapped around one massive Bitcoin position. So if you want to understand the real risk and the real upside people are betting on, you can't just stare at the Bitcoin price. You have to look under the hood. That's what we're doing in this video. Quick context. Before we get into it, quick note. I'm not telling you to buy, sell, short, or hold anything. This is a research breakdown. The point here is simple. Take the noise down, look at the structure, and separate what's actually in the filings from what people are just arguing about online. MicroStrategy, now legally called Strategy Inc., but most people still just say MicroStrategy or MSTR, has basically transformed itself. It started as a software company. Now it describes itself as the world's first Bitcoin treasury company. But here's the part that gets skipped in a lot of the coverage. MSTR didn't just buy Bitcoin with spare cash sitting around. It built a funding machine, common stock, convertible notes, preferred stock, ATM offerings, different layers of claims, different dividend terms, different levels of risk. And that matters because when people say MSTR owns Bitcoin, that's true, but it's not the full story anymore. As of the company's most recent 10Q, filed March 6, 2026 for the quarter ended March 31st, 2026, total convertible debt was about $8.2 billion, and total preferred stock carrying value was about $8.98 billion. Put simply, that's roughly $17 billion of claims sitting above the common stock before you even get to the simple version of the Bitcoin story. So this video is really about one question. What is actually sitting between MSTR common shareholders and Bitcoin? The capital stack map. Let's build the stack from the bottom up. At the bottom, you have the common stock, MSTR. That's what most people know. No fixed dividend, most exposed to the upside, also the most junior claim if things ever get messy. Above that, you have the convertible notes, about $8.2 billion as of March 2026 10Q. These run across maturities from 2028 to 2032, and many of them carry very low coupons, with some as low as 0%. In May 2026, the company repurchased $1.5 billion of principal on its 2029 notes for about $1.38 billion in cash. So they bought back that debt at about an 8% discount to par, and they used cash rather than issuing new stock. Then you get into the preferred stock layer. There's STRF, a 10% fixed cumulative preferred, generally described as the most senior of the preferred series. There is STRC, nicknamed Stretch, which is a variable rate preferred targeting a $100 par value. This is currently the largest preferred series by dollar amount outstanding. There's STRK, a convertible preferred that can convert into common shares. There's STRD, which has a discretionary, non-cumulative dividend structure. In plain English, if the board doesn't declare the dividend for a period, it doesn't just automatically pile up the same way a cumulative preferred would. And then there's STRE, a newer euro-denominated 10% fixed preferred, listed on the Luxembourg Stock Exchange as well as NASDAQ. Now, one important housekeeping point before we go too fast. Some of these terms are nailed down from filings and company materials. A few finer details still need to be checked against the exact primary documents, so I'm not going to pretend every detail has the same level of certainty. When something is verified, I'll treat it as verified. When something still needs the original document, I'll say that too. STRC, Stretch, Deep Dive. Let's zoom in on STRC because this is one of the most interesting pieces of the whole structure. STRC has a $100 stated amount and a variable dividend rate that the board can review and adjust. As of late May 2026, the rate was 11.5% annualized. Then for dividend periods with record dates on or after July 1st, 2026, the company raised it to 12%. At the same time, an amended certificate of designations effective June 30th, 2026 changed STRC from monthly dividend payments to semi-monthly payments on the 15th and the last day of each month. So this is not just a boring preferred stock sitting in the background. Management is actively managing this thing. The company has also said its objective is for STRC to trade roughly around $99 to $100, close to par. But here's the catch. That does not mean the dividend rate automatically goes up every time the market price dips below that range. In the company's June 29, 2026 announcement, they made clear that the board is looking at multiple factors. It's not just a vending machine where price drops in, rate hikes come out. One thing I'm still treating carefully, STRC's exact redemption terms and its exact seniority compared with the other preferred series. I found that described consistently in third-party summaries, but I'd still want the actual certificate of designations before treating every fine detail as locked in. The reserve story. This is where the story gets especially important. MicroStrategy has something called the USD Reserve. Think of it as cash set aside to cover preferred dividends and interest on debt. And this number moved a lot. When the reserve was first established, it was around $2.25 billion. By December 2025, it was down to about $1.44 billion, which was around 21 months of coverage at the time. By May 31st, 2026, it had dropped further to about $900 million. That's the kind of thing that should get your attention, not because it automatically means disaster, but because it tells you liquidity matters here. This structure has ongoing obligations. Dividends and interest don't care about Twitter debates. They have to be paid. Then, on June 29, 2026, the company announced a major policy change. They rebuilt the reserve to $2.55 billion and adopted a formal board policy requiring at least 12 months of coverage at all times. Against current annual obligations of about $1.76 billion in preferred dividends and interest, that $2.55 billion reserve works out to roughly 17.4 months of coverage. They also authorized a Bitcoin monetization program of up to $1.25 billion specifically to help fund that reserve if needed. And on top of that, the board authorized two separate $1 billion buyback programs, one for the preferred digital credit securities with STRC named as the initial priority, and one for common stock. So the plain English version is this. Yes, the reserve had shrunk to a much tighter level by May, but also yes, the company responded with a formal liquidity policy and rebuilt the reserve shortly after. Both things matter. If you only mention one side, you're not really explaining the situation. Now let's go back to the asset side, because of course, this whole structure is built around Bitcoin. MicroStrategy held 672,500 Bitcoin at the end of 2025. That grew to 762,099 by March 31st, 2026, and roughly 843,700 by late May. On May 31st, 2026, the company sold 32 Bitcoin, about $2.5 million, at an average price of $77,135 per coin. Now, 32 Bitcoin sounds like a lot in normal person terms, but against a position of more than 843,000 Bitcoin, that is tiny. That is not a strategic reversal. That is basically a small trim inside a gigantic position. And holdings kept growing after that, reaching 847,363 Bitcoin by June 28, 2026. One more important point. The company says directly on its investor page that none of its preferred securities are collateralized by its Bitcoin holdings. That means the preferreds are tied to the company's structure and credit story, not directly backed by specific Bitcoin collateral. What I did not fully verify in this research is the custody setup and whether there is any proof of reserves attestation. That's not me saying something is wrong. It just means that that piece needs its own deeper dive. Here's the clean recap. The pieces I'm comfortable treating as verified from filings or company materials are the STRC dividend rate history, the change from monthly to semi-monthly payments, the reserve moving down and then being rebuilt, the Bitcoin holdings trajectory, the 2029 debt purchase, and the new liquidity and buyback framework announced in late June. The pieces I would still put in the needs primary document confirmation bucket are STRC's exact redemption price and seniority ordering, STRK's exact conversion ratio, STRD is precise, non-cumulative language, and the custody of or proof of reserve details. That distinction matters because a lot of MSTR commentary blends everything together. Filings, opinions, screenshots, social media claims, and vibes. This video is trying to keep those lanes separate. Here's why all of this matters. If you're bullish on MSTR, you need to understand the machine you're betting on. The upside case is not just Bitcoin goes up. It's also that this capital structure keeps working, investors keep showing up, and the company can manage its obligations through different market conditions. If you're bearish on MSTR, you also need to understand the structure, because if your entire argument is just Bitcoin might go down, you may be missing the mechanics that actually drive the stock, the preferreds, and the debt. And if you're undecided, this is exactly where the real work starts. Not with the loudest tweet, not with the cleanest meme, not with a headline, with the capital stack. Because MicroStrategy is no longer just a simple Bitcoin story. It is a Bitcoin treasury strategy sitting inside a very complex financing structure. I'll link the main sources below, SEC filings and MicroStrategy's own investor communications. And if you want a deeper breakdown of one specific part of this structure, the converts, STRC, STRK, the preferred stock stack, or the Bitcoin custody question, drop it in the comments and I'll use that to decide what to cover next. Because with MSTR, the headline is never the whole story. The structure is where things get interesting.